Welcome to this new episode of Your Next Trade. Code today, Big Tech and China. So many things to discuss. Market is making new highs and we're going to have a very busy week, starting with the Big Tech. Tons of earnings coming this week with the Microsoft of this world. And as well, we're going to have China on Thursday with potentially a big deal between the US and China. So let's start with the chart that we have in front of our eyes, which is the Fabulous 7, the big tech and how they have been behaving since the start of the year, or should I say over the last 12 months since the election of Donald Trump. So like the market, obviously, it tanked around March and April and recovered since then. And what is interesting, it is making new highs. And on Friday, we had a breakout higher, which is pretty much the same as the S&P, the Nasdaq, making new highs. So we do know that if the big techs are making, 30 to 50%, and most of the market has been driven as well by short-term call options and as well from passive investment with ETFs. Those passive investment do have a big weightings into those big tech, and that is driven the market higher. So really, this is the chart. As you can see here, we are making a new high. We are breaking higher just before the release of most of those earnings season. So last weekend, we discussed the start of the earnings season. We looked as well around the credit market and some portion of the credit and as well regional banks that were under pressure. But this week, what the market told us is everything is fine. That was purely a risk-on market where the S&P was up roughly 2%, same as the Nasdaq. As you can see, a lot of blue is positive for the week. Looking at the FX, looking at currencies, we're mostly flattish. But the same pattern for the crypto world, where when we have a risk-on crypto with Ethereum and as well Bitcoin doing pretty well. Gold was down on the week. We mentioned last weekend that we were looking at a climax on the gold, and we had a big sell-off on Monday where the gold market, when gold, silver were down 5% and plus. So as always, as traders, we want to be looking at those end of big momentum trades, big moves, and we clearly identified as of last week, due to the massive calls that were bought by retail traders and as well big volumes, it felt pretty much like we were talking about a close top for the gold market, and this is exactly what we had. WTI pretty strong as well, up 7%. Why? Because there are talks that actually we are going to be putting more and more pressure on Russia and to India as well. So anyone that has been buying oil from Russia will be under pressure. So that means overall, if we look at the week-to-date industry performance, there is a lot of green. As you can see, S&P is roughly around here, so mid between the buyers and the sellers. So on left-hand side, gold miners, silver, anything that has been really strong before that with the gold. And this is, again, something that we flagged, is saying that, we are very close to the end of this bull run for the gold. Right-hand side, you see aerospace. So we had tons of good earnings in that space, talking of G and some other names that did very well. So that is mostly driven by the earnings. As always, there is a strong correlation between how the earnings have been doing and how the price action is. And as we're going to be seeing later, actually the earnings season is pretty good in the US. So let's look at the sector performance. What does it tell you, this one? When you get utilities, consumer staples that are down on the week and the rest is up, this is a pure risk-on market. Really tons of money going into the market and participation, and hopefully hoping for the end of the year rally that normally we do see in terms of seasonality. So that translates into, as we said, the S&P up 2% roughly, technology 3%, because this is the high beta and this is the leaders of those markets, and this is why it is driven this market higher. So what about rates? We are bang on 4%. So that has been the translation, as well as lower inflation. I'm not sure about lower inflation, but at least the perception. So we went from the 4.2% to 4% now, and we are trading around that level. If you look at the Fed funds expectation, so on next Wednesday, we're going to have the FOMC meeting, and the expectations have been pretty flagged, and we should have, at 99% to 100%, a 25 bips cut. And then we're going to have another cut in December. So 2 cuts for the next 2 months. That means a dovish Fed. And that explains as well why market participants are buying more of this market, because when the Fed is more accommodative, that helps stocks. What about the VIX? We had a big move up on the VIX last week. We discussed, those calls and where we went from 16% to 25% and above. We are back to the 16%. If you have not watched one of the videos that I've done in the past explaining, what is the 16% rule for the VIX, you should be looking at it. That translate into a 1% move for the S&P. So we are back into not low volatility, but at least 16% for the VIX. This is the same for the 9 days, where volatility is pretty much compressed again. And I'd explain why the market has been so strong as well. So last weekend we discussed, that the market was under pressure. So looking first with the S&P, that we had a bit of pressure on the S&P and the Nasdaq for 2 reasons. The first reason were the CTAs, meaning the momentum or the quant fund that are mostly looking at, as long as the market is going higher, they are long, and when the market goes down, they short. So that pretty much, roughly what they did. And they were very, very long coming 10 days ago, like 100% more exposure. And the market started to tank and they had to sell. Similarly, the vol control, the funds that are selling volatility, get caught. And this is why we saw a massive jump in the volatility with the VIX. But for this week, when you do have like volatility that get compressed again, which is as well volatility at high level, that means it's more an opportunity for those funds to be selling volatility. And this is why we saw volatility going from 25% to 16%. And in the meantime, you do have like stocks going up. So as we said before, S&P making new highs, Nasdaq making new highs. So this is for the futures, obviously. Let's go into the Nasdaq. Let's look as well at the Russell 2000 making new highs. So pretty much, this is the hoo-ha, not new highs, but at least is breaking higher from what we saw. And as well, you see this trend. So Russell, it's an interesting one because, what people have been saying for months and months is the market is broadening. But the reality is the market is very much driven by the same very few names and the same very few themes. I want to flag the gold. So we are at 4,100 roughly for gold. This is something that we discussed in detail last weekend. And on Monday, Tuesday, you see the sell-off that we had. I think it's more, you can have a better understanding if you look at GLD, for example, where you're going to be having the volumes, or you can be looking at the total calls. Another one that I want to flag as well is obviously where we started this call, which was talking about the Fabulous 7 and how they have been behaving and how they have been driving the market over the last few years. So you see this big chart. Well, literally, we went from 5,000 in 2000, and now we are at almost 35,000. So huge move. But you see, most recently, we are talking Monday, breaking higher. One of the issues that we have is this participation is not great. So it's not done in higher volume. But overall, if you combine that with obviously one of the biggest index and the one that is the biggest leader of them all, which is the Philadelphia SOX, talking about semiconductors, breaking higher on Friday. So the pictures, if you go across assets, is pretty much the same, making new highs. So participation and going into this week, what happened? So this is the chart for the S&P futures, as you can see. This is almost the usual 1.5 to 2% up. And actually the 1.9% up is exactly the same as what was priced by the straddle a week ago at 1.9%. So we made the move that was expected by the market on the way up. But I want to flag something that is very important. This is the earnings season. So we started 10 days ago. A bit of a mixed picture, but for right now, the picture is really, really good. So starting here on the right bottom, looking at the EPS bits and the sales bits, as you can see, the orange are much better and the earnings as well. So last weekend, we flagged that most companies, 85% something, were beating expectations, but the literally not that the magnitude of the beats were not that great. Whereas now, after 29% of the companies of the S&P have reported actual results, the beats have been really, really good. We are talking really 7.6% above estimates, which is good, and that's the same with sales. So really good earnings season. If you watch some other videos, you probably remember that the expectations for the year-on-year and the the quarter-on-quarter were below expectations. So as always, market is putting the numbers lower, and that makes the bit much, much easier. But still, this is a good earnings season. So this is for the earnings season. We're going to have, as I said, from China on Thursday. We're going to discuss that for the catalyst, but obviously the market is really looking into that number. We had the CPI on Friday. So core CPI, this is what I like to be looking at. The month-on-month was 0.23%, so lower than the expectation of 0.3%. So the market went up 1% on the day. And as well, on the year-on-year, you're still at 3%. So I like this chart of the core CPI versus the Fed funds targets. And as you can see, the Fed policy is pretty much dependent on the CPI. This is the first mandate, meaning inflation, and the second mandate, which is the NFPs. Normally, on the mandate, it's about targeting 2% inflation. And now these days we are 3%. So we've been saying that this 3% target is the new 2%. And actually that both the Fed and the Trump administration is okay of running higher inflation. If you think about 12 months ago, Trump and his administration were saying, don't worry, inflation is going to come down massively. It's still at the same level that it was a year ago. It's still at 3%, which is much, much higher than the 2% target. So inflation is running higher, is running hot, and that explained as well why assets are going higher. But overall, good earnings season. As we said, CPI has been below expectation, but still at 3%. And as we just discussed with the technical analysis, the volatility control went the other way as of versus last week. So last week, with volatility going higher, they had to sell the stock and buy more VIX and more protection. This week, volatility was compressed and stocks went higher. So what about the catalyst? Tons of things for this week, from macro to earnings and to political. So let's start with the macro with actually macro/FOMC rate decision on Wednesday. We said it's going to be 25 bips. We're going to have as well the Bank of Japan. We're going to have the ECB that I put here, and we're going to have the Bank of Canada. So many central banks, the most important one being the Fed. The Fed is going to be, they are data dependent. They are cutting by 25 bips, and they're going to be probably cutting by another 25 bips in December. Then we're going to have tons of earnings. So this is obviously very important. This is the most busy week of the earnings season. And as we see here, we get the big tech. So big day just after the FOMC meeting, actually after the close, we're going to have on Wednesday, Meta, Microsoft, and Google, Alphabet. And on Thursday, we're going to have Amazon and Apple. So really 5 of the 7 big tech are coming with earnings. Tesla was last week, and we're going to have Nvidia later. But really a packed week in terms of earnings. And as we saw so far, earnings have been pretty good and beating the expectation by magnitude bigger than usual. What about looking as well about the seasonality? So this is a chart from Goldman Sachs that was taken from the 20th of October. So roughly we are at the same level. But what does it tell you is, if you look at the seasonality since 1928, so roughly 100 years of seasonality, the market from now until the end of the year, we are talking the S&P goes up between 3 to 5%. So you do have like many things that are going in favor of the market going higher. And this is why everyone is flagging the same on social media. and that you're gonna have this seasonality. So really what we have, seasonality, big tech earnings, Trump meeting. So this is on Thursday. We're already having headlines that they are sitting in Malaysia, both China and the US, and they are telling the market that the expectations should be high and that the deal is coming and everything is going to be fine. So you do have like tons of things that are priced in. So it's almost like 99%. It's a blue sky scenario, both for earnings, for inflation, for everything. As always, you decide which way to go. In terms of moves for the week, market is pricing a plus minus 1.5%. So this is obviously below last week, and that translates roughly, if you get the S&P around 6,000, 7,000 into 90 to 100 points for the S&P. So very busy week, tons of things to be happening. Obviously, a lot will be on Wednesday and Thursday. And obviously, that's going to be helping the 0 day to expiry options that are, where we're going to have tons of them that are expiring on Friday. So a big week, as we said, earnings season pretty good so far. Many good signals for the for stocks, for the market to go higher in the next few months. I'm still running a small short position, not going my way, but I've been lucky with some other position with special situations, and actually in Europe I've been doing well. But overall, I'm running a 20 to 30% net short on my book. I'm going against everything that I've been talking to you today. So as always, take everything with a pinch of salt. So if you want to go to the 4x4 video series, if you get questions, if you want to join the trading community, here you get everything. Otherwise, I'll be happy to talk to you probably next week. Have a good trading week. Bye-bye.